Good evening, everybody. During last session, we had studied a 2.5 yearly wave chart, and we derived conclusion that we are witnessing wave 4 of larger terminal impulse. So this is a time to fine tune the behavior inside wave 4. So first, login website. So under the program, my product, see here weekly and monthly. So monthly we will find here. So let us download both reports. We already studied this chart, and from this chart we concluded that we are studying this wave 4. Now we are going to fine tune that what structure, what pattern is possible inside this wave 4. This report we released on Monday, March 1st, 2020. In this report, we clearly said that there is a danger if breaks 10,636. So this report was all about this wave G top, and for that we said that once 10,636 will break, the target will be 7,893, and this target is a minimum target. Here we clearly mentioned that downtrend will break 9,556 and then it will break 7,893 and may correct deeper. Now it is time to study the present report. But before discussing a latest monthly chart, have a look at half yearly wave chart. This is half yearly wave chart showing parallel channel with thick upper resistance line, and according to rule of polarity, previous resistance or resistance line later on becomes a support. Now where this line created a resistance here, now here this line provided a support, and likewise if this fall will come here, then it can provide a support. And here also, if you will see, there is a one more line which created here resistance. So there are the well chance that inside area what we are going to target, that 6,356 and 5,118, there is a good possibility that here market will take a support. So if we are forecasting wave A, so we will expect that it will take a support like this, then it will form whatever pattern that that will form later on, that triangle or flat, and then after you will see the wave, next wave fifth. So here main point is that we are looking with the rule of polarity, that earlier resistance line now will become a support line. This is logic behind 6,356 to 5,118 would be our target. After this we'll see one more monthly chart. Okay, now this monthly chart here, the same line we had taken here, and so here also same thing we shown, that only difference is that here wave 4 we shown very clearly that wave A, B, C, D, E, and this is our main forecasting, that wave 4 will overlap with wave 2, the top of 2008, and here there is a contracting bias, so we are of view that this apex that will give support, then this resistance line will play the role of support here, and then this resistance line will provide support here, and that support I think that it's enough to reverse the market, and this is on the basis of rule of polarity. Now I would like to say that we are on monthly chart, we are going to track this only this single fall, first fall, and that we are labeling with wave A. Now this wave A, for our understanding purpose, we will divide in first segment, second segment, and third segment. First segment, this is a first segment, so second segment have to correct this first segment, and there are the two parameters to observe the second segment. One is the price and second is the time. We will compare the second segment with first segment, that how much second segment retrace the first segment. Will it retrace more than or less than 38.2%, that is 9,390, or will it retrace more than 38.2% but less than 61.8%, that is 10,552, or retrace more than 61.8%. So this is about the price. Next thing is that how much time this second segment will consume. Will it consume more time that taken by first segment or less, somewhere like this, less. This is next important observation. Now see here, the first forecasting shown by the blue line, which is near about 38.2%. If market will retrace 38.2% and reach near about 61.8% or not, but consume more time than first segment, then there are the well chances that Nifty can form bottom below the top of 2008, that is 6356 up to 5119. So this is the first probability. There is another probability also exists that second segment will retrace to first segment less than 38.2% and consume less time than the first segment and start a decline. If this happens, this will be more dangerous. In this case, Nifty can break 5118 level also and can go further lower as shown in previous chart, the second level. So this is a forecasting about a monthly chart. So synopsis of this chart is that we need to observe first this second segment, that how much retracement occur below 38.2% or above 38.2%, and how much time it will consume, same time consumed by the first segment or less time than the first segment. So that will decide that will this fall stop at 5119 or not. But according to, we are looking at a larger pattern, that larger pattern is terminable, so it is essential that this part of wave 4 should overlap with top of 2008. So if you want to keep updated with every small move of Nifty, you can subscribe our report. Thank you very much.